Welcome to another exciting episode of Scouting for Growth. I'm your host, Sabine VdL, and today I am thrilled to have an exceptional guest joining us, Nektarios Liolios, a friend and a colleague who recruited me to run Startup Bootcamp InsurTech many years back. An accelerator which became one of the leading recognized and international accelerators in insurance, actually. Nektarios is a true FinTech trailblazer, a passionate entrepreneur, and a dedicated mental health advocate. With over 2 decades of experience in the financial services sector, Nektarios has been at the forefront of the FinTech revolution. He has co-founded and led several groundbreaking initiatives, including Startup Bootcamp FinTech, the world's largest FinTech startup accelerator, and the Future Farm, a global community fostering healthier entrepreneurship. Nektarios' entrepreneurial journey has taken him across the globe, working closely with hundreds of startups and early-stage businesses in major tech hubs like London, New York, Singapore, and Dubai. His latest venture, Radish Credit, is a testament to his commitment to driving positive change as it aims to empower underserved communities through innovative lending solutions. Beyond his impressive professional achievements, Nektarios is known for his passion for mental health advocacy, as highlighted within the startup ecosystem. He has been a vocal champion for prioritizing well-being and creating a more supportive environment for entrepreneurs. In this episode, we will dive into Nektarios' wealth of experience and insights on the evolution of FinTech, building thriving startup communities, investing in early-stage ventures, and fostering a more inclusive and mentally healthy entrepreneurial landscape. So, without further ado, let's welcome Nektarios Liolios to Scouting for Growth. Hi, Nektarios. Thank you very much for joining me on Scouting for Growth.
Hi, Sabine. Thank you for having me. It's been a while.
Gosh. Yes, it has been a while. It has been a while. And because it has been a while, I would love for you to give us just a little bit of an intro around Nektarios, where you come from and what you have done and where you are today, so that people have a little bit of context and background about you.
Well, when you reach my age, these introductions get longer and longer. The basic story is I'm 57. I've been an immigrant all my life. I live in London, but I was born to Greek parents in Germany. I fell into financial services. I spent 17 years of my life in the corporate world, and then I ran away and joined the circus, which was my path towards entrepreneurship and innovation when I joined InnoTribe at Swift, which was one of the first financial services initiatives post-financial crisis, global financial crisis. That led to me co-founding what became the first and at some point the largest global corporate innovation-driven startup accelerator for FinTech and InsurTech. That's how we met.
Yes.
And then I walked away from all of this, took a break, and came back by doing 2 things. One is called the Future Farm, which is an initiative to advocate for better mental health and entrepreneurship. And the other one was a crazy thought that became an idea, that became a project, and that ended up being the first LGBT bank in the world. And I'm working on a lending as a service business called Radish.
Yeah, amazing journey. And I want to, I remember when I heard about Future Farm, that was, I think, just before COVID, right? You set up Future Farm and you launched the podcast. What was, the impetus? Why did you decide to shape that proposition, to offer this to the market?
Okay, this goes straight in there. When we started the accelerators, we all were riding the wave of this very first wave of glorifying entrepreneurship. Startups were cool. This is 2011, 12, 13, when I was doing the startup competition with InnoTribe. And with Accelerator, we thought it's a cool thing to tell people. Every day in the accelerator is 1% of the time we're with us. So we created this artificial pressure because it was all about build things faster than in the wild. Um, and there were glimpses of seeing people struggling, but I really didn't take them too seriously. Sometimes you would see a founder really not being well, and you would take them aside and maybe ask them to stay home for a couple of days to look after themselves. But the real understanding of how bad people's mental health was affected during the early stage of building a business was not something that I was fully aware. I sort of became clear to me as we progressed with building these programs. In parallel, I have my own mental health journey. I grew up with a mother who was clinically depressed, so I was quite familiar with mental health manifestations. So when I left Rainmaking and started Bootcamp at the end of 2018, I went through my own period of a variety of different things. I lost my dad the day after my last day of work. I had to deal with the mess that was my identity, was the business, and the business was my identity. So I was grieving the loss of a big chunk of my identity. And I thought maybe there's room to do something about this. And I did this with with a woman I knew very, very kind of, I didn't know her well, Vladi Brestenska, who came from the VC world where she's done something similar, where she was looking at entrepreneurs and she founded something called Founders Anonymous within the fund that she was working with to give founders a space to talk about how hard it actually is. And that was the impetus. A lot of people going through very severe experiences, but nobody has the permission to talk about it because the outside picture is that startups are cool and the hustle is cool and everything you need to do is ruin yourself because the returns of successful startups are just not comparable to the corporate life. So the Future Farm is really trying to demystify all that, move away from the shiny lights of Silicon Valley, and in parallel allow people to acknowledge that it's really hard and give them access or get them to understand what they need to do to get better.
So, I wanted to get straight into this, Nektarios, because you won't believe last week was InsurTech Week. I had a mastermind, my first mastermind, but we used to do those all the time, right? In Startup Bootcamp. Our life was workshop, mastermind, getting those founders to accelerate their business in 3 months. And I think it's very important to understand that even the pressure which was on us, long days, home at midnight, starting back the following day, we usually start at 10. People wondered why we started at 10 while we were working the whole night. Is actually an important part of why I wanted to start looking at that angle around mental health and the work you are doing around Future Farm. So I did this mastermind, and it is a mastermind around authentic identity.
Mm.
And the first statement I made as I was presenting is the same story as you. Startup Bootcamp InsurTech became my identity. And I think when I came out of that experience in February 2020, what I realized is today people call me the InsurTech Queen, right? But people call me Startup Bootcamp, right? And they didn't know how to communicate with me. So I actually lost as well my identity, and I was trying to refine who I was. And I was, I was I am unapologetic about who I am today. And like you, and I don't know whether it's something we've learned both, is that I do not want to work for one business. I do not want just one project. I do not want to be lost in one brand identity. And that's why I have Alchemy Crew Ventures and I do other things, because I want Sabine to be bigger than any brand names which are out there. What is your feeling about that? And do you understand where I'm going with that as well?
So I understand what you're talking about totally. I think we can dig deeper into this. With the accelerator, we were part of the problem. If you look at the well-being of individuals or people, we cared about the business, we didn't care about the people behind the business. And when you talk to founders, especially first-time founders, and especially early stage businesses that are founded by young people who just don't have the life experience to be braced for the ups and downs of what's ahead. It's a whole bag of things. It's identity, it's loneliness, it's imposter syndrome, it's co-founder conflict. There's so many things that are just naturally happen in life that are concentrated within the world of building a startup. So these people are completely left to their own devices to deal with these challenges. I got into entrepreneurship in my mid 40s. So I already had some life experience and I was, I think, a little bit better prepared to deal with these things. I was not expecting my identity to be so meshed up in the business. And when I came out of this, I actually, for me, the pendulum swung from the Rainmaker Startup Bootcamp Live, which was me, to what you just described, which is I want the brand to be Nektarios because that's my authenticity. And now I'm sort of somewhere in the middle where I'm building a new business, which I'm focusing on. But all of us are people, we're four co-founders, we are all a little bit older. And we all also have this implicit acknowledgement that became explicit that we want to build a business where we don't have to kill ourselves. It doesn't mean not working hard, but it means being allowed to say, you know what? I'm struggling today, or I'm going through a really difficult period, I'm distracted, or the conflict thing is really important for me, where we can go, you know what? This is a difficult thing, but if we both come into this with an open heart and an open mind and an adult approach to conflict, we will come out of this having resolved the conflict. So all these things had taken me to a slightly different journey than what you're describing, but it is very much driven by this acknowledgement that authenticity is important. We had a very interesting founder who's non-binary, who was on the podcast, who was talking about the difficulty of showing up authentically, knowing that this may alienate investors. It's like, okay, what costume do I put on today if I want to achieve X or Y?
Yeah.
Which is going to be a performance, and ultimately it's not going to be authentic or true. And there's really fundamental questions also for vulnerability on the days where you are feeling vulnerable and you have to pretend because that's not what the industry expects from you.
Yeah. Yeah. I get that. So I want to continue on that conversation on mental health and entrepreneurship because it's where I went straight into. And I think it could be helpful as well, Nektarios, to understand why mental health is a topic, right, which is critical to address today. We are remote working, we are building businesses, we may actually work in big corporation, but now working remotely as well. So why do you think it is critical to address mental health in the startup ecosystem? But, we have been working often in B2B. So how that links back to the corporate environment as well.
The challenges between somebody who works in the corporate world and somebody who works in the entrepreneurial world are different, especially for founders. And the reason we're doing the Future Fund with a focus on founders is because you don't have the same support system. In a corporate world, you can actually take time off, or you can actually talk to HR. Maybe there are even initiatives that support you there. But founders are very specific type of animals, and there's very little research. When we started, there was only one study around mental health and entrepreneurship, where it was done like 5 years before by Dr. Michael Friedman. And this is the one thing that people refer to all the time.
All the time.
But the interesting thing is that it takes a particular type of setup, makeup to even become an entrepreneur. So the intrinsic motivation to build something comes with certain things. And the study shows, for instance, that entrepreneurs are much more likely to actually have anxiety, depression, neurodiversity manifestations like ADHD and bipolar in their family history. So there is a link between, oh, I want to build a business, I don't want to have a boss, I'm going to be my own boss, etc. And the potential that then go, actually, but because of that, I may experience certain things. So there's one. So entrepreneurs are different. The motivation is different. But then we had a fascinating conversation with another scientist called Ute Stephan, who is at King's College, who's done a recent study, who said that for entrepreneurs, the ability to be stressed and happy at the same time is different from the general population. So it's this messed up disconnect where stress, which is a killer, which is part of the startup life, but also part of
Yeah.
the corporate life,
Yeah.
right? It exists, but entrepreneurs derive happiness from that. And therefore, they ignore the signals that the body is sending, the mind is sending, to say, hey, actually, you should slow down. Whereas in the corporate world, it's much easier to experience stress without the happiness, much more likely to go, okay, this is not good. I need to withdraw. I need to change something. So
Mhm.
there is a difference. Why is it important? Important because the things that are associated with startup life are just not true. There's this disconnect where you know that your chance of succeeding a bit with the business that you start are just very, very small, but everybody goes in believing that they will be the ones who make it, which is something that the investment industry, the VC world, capitalizes on, right?
Yeah.
But then you get into this unhealthy loop of pressure and expectations and a certain template that's been given to you as the only way to do it.
Mm.
But reality is that more people come out of the entrepreneurial world broken than out of the corporate world.
Yeah.
So there are differences. When we launched the Future Farm, it was fascinating that because of my background and all the B2B work and all the corporate innovation work, the first thing I got was all my corporate innovation people coming to me and saying, what about us? And it's like, no, I get you, but you have more options than somebody who's just started a business for the first time. So I'll focus with my limited resources on the people who have, I think, a bigger need, but also more barriers to acknowledge that it's difficult. But yeah, COVID has shown that in the corporate world, you have your challenges. People, again, um, have no permission to talk about it. It's interesting that there's a gender question, there's a
And
cultural
particularly at
question.
executive level, right? Even
Yeah.
when you're very senior in particular, you always have to have this shield, I would say.
Loneliness
Yeah.
has come up from executives. Like talking to a CEO of a mid-sized bank over a glass of, I think it was brandy, and he was talking to me about how lonely he felt because he could not share how he felt with anybody. He couldn't share it at home because he wasn't comfortable his family knowing that he was struggling. But of course, he couldn't share it at work because he was the person the buck stopped with. So imagine.
Yeah, no, it's hard. It is hard. And I do see it amongst colleagues at executive level and partly female colleagues. A lot of them, CXOs, have reached out last year, partly since 2023, trying to find how to rebalance who they are authentically and, being so within their corporate environment and finding that right balance because you are an influencer. I do a lot of social media influencing work with a lot of brands. And what you find often they are not authorized to respond to the content I
Hmm.
write for those brands, even though they have been commissioned. Because I think they have not learned to communicate in that way and finding their own authenticity within the corporation they are working with, which is, I think a very, very hard topic to address today, but it is a necessary one. So wanting to stay as
So
well into this conversation around mental health and entrepreneurship, I know you want to tell me a thing, but I also would love for you to weave in what advice would you give to aspiring tech founders, FinTech founders, insurance technology entrepreneurs who are just starting their journey, and maybe how you would probably give inspiration as well to the corporate world.
sure. The thing I wanted to say is just to illustrate what it actually means, because sometimes these things sounds very abstract, right? People talk about anxiety, depression, burnout. What does this mean? We have a guest on our podcast who's going to come on in the next episode who talks about the fact that when she was really struggling because over a week they've lost five of their biggest clients, her anxiety went so high that she would not physically wasn't able to go into the office. So, but she would leave the house in the morning and then she would sit for 2 weeks every day in the car because she was paralyzed by this anxiety of going into the office and facing reality. Right. And it sounds to everybody who hasn't been there, it sounds like, oh my God, this is ridiculous. Just get
It
yourself together.
happens.
But then when you talk to the individuals who are smart, driven, ambitious, successful people, and they go, I was looking at myself going, what the hell is going on? That's just one example. Another example, and this happened on a panel in Money 2020 in Vegas a couple of years ago. We had a woman who was talking about the stress that she experienced in building a business, that at the age of 36, it triggered off premature menopause.
Oh
So
my.
her body responded in a way that created something irreversible, right? So there's an interplay between physical health and mental health.
Oh,
It's
you're
okay to say, oh, I've broken my leg because I was skiing. It's not okay to say that, as another founder said to us, my brain is broken and I'll just come into the office for 2 weeks. So this is why I think it's very important. And I'll lead to what you can do. Every single conversation we've had, every single person who can now talk about it starts with acknowledging that you need to learn to observe your body. You need to look inside. So self-awareness and self-introspection is key. So for advice to founders is, if you see signals, don't ignore them. If your sleep has got worse, if you stop exercising, if you don't eat as healthy as you used to, if you see changes in your behavior, take a note, because these are signals that something might be off. So it has to start with this self-checking that everybody has to go through, because if you don't realize what's happening and verbalize it and acknowledge it, you don't have anywhere to start from. That's one. And we actually have this catchy three S's: self-awareness. The second one is small steps. Entrepreneurs have the tendency to go, well, I want to do it all, right? It's like, I had this conversation yesterday with somebody who was saying, well, I'm not eating well, I'm not exercising well, I'm not disciplined enough, or blah, 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 blah. I've neglected my social relationships. And I said, well, and you want to sort it all out, right? And he goes, yeah, absolutely. I said, well, how about you just do one thing a little bit? And the next day you do that one thing a little bit longer. Go for a walk. And the next day you just do an extra 2 minutes. So small steps are super important, because it gives you a feeling of achievement and success. And you're doing something that's good for you and that feeds into your well-being. And the last big one is sharing. The majority of people who have had a mental health experience and spoke to us will say that I had nobody to talk to. I had this need to talk to somebody, but I didn't know who to turn to. I didn't feel comfortable sharing, but there's this fundamental need to open up to somebody. And it could be a trusted person. It could be a neutral person, like a therapist or a coach or a counselor. And sometimes sharing is also maybe just, this was my experience personally. I started journaling. And for me, journaling before that was something that I would put into this bucket of la-di-da, new age, meditation. All these things meant nothing to me. And I realized that with the journaling, though, because I joined a journaling group, I was forced to dial in every day. We did this online on Zoom. This was at the beginning of the pandemic. And it forced me to every day show up. So it was community. There was an element of sharing. But the best thing about journaling for me was 3 months later, you look at your entries and you go, oh my God, that was so important that day, that it ruined my day. And 3 months later, this was absolutely nothing. So it gives you perspective. So self-awareness is important. Small steps, don't boil the ocean, and try and find ways to share this with people, because community matters.
Yeah. Journaling, it's an interesting point around journaling, because when you do journaling well, you're actually manifesting and visualizing potentially, what you can achieve as well. And so as part of, building authentic identity, journaling as well is very important to really truly find yourself. So it's interesting that you went into the journaling journey to actually also develop probably a different part of the brain as well, I think, as part of that process. You're a FinTech veteran, and I'm sure a lot of people want to hear about your FinTech experience. So I'd love to go now into understanding from your point of view, where do you see FinTech going in the next 5 years? And potentially also diving into the power of community and ecosystem as well, Nektarios.
So, as you know me for a long time, I'm very cynical about aspects of the fintech world. And this is, I mean, fintech veteran. I've been around for a long time, but my appetite, my interest in fintech has always been driven by the corporate innovation angle of this. So, how are these new things that are emerging relevant for the industry to change? And if I put my starting point in this world at the beginning of 2011, when I started my transition from the corporate world. So looking back 13 years, I'm shocked how little has changed on the corporate side.
Mm.
The reason I left my corporate innovation business was because I lost the faith that the banks, the insurers, the big corporates will do the difficult stuff because they only focus on the easy things. And I don't think much has changed. It's interesting still having conversations with banks where they're going, oh, we should do this and we should do that, and go,
Yeah.
we had this conversation 10 years ago. Seriously? Are we still talking about this? So when do you see this evolve? It's really difficult for me to make a prediction from that perspective.
Okay.
What I see is I'm very encouraged by seeing things that people 10 years ago said it'll never work. They're dead, or
Mhm.
like them becoming successes. People were so impatient with the commerciality of a Monzo or a Revolut when they started. It's like, oh, they don't get the clients, blah, 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 blah. And guess what? Look at them now. It's an evolution that's taken much shorter time that the banks took to get to where they are. But the banks and the kind of the noisemakers in the ecosystem are just not patient enough. But things work out if the business model works, if the team is good enough to pivot when they need to pivot, they will go through the difficult times and they will resurface. So this is really important for me to acknowledge. There was so many naysayers 10 years ago. When we started Startup Bootcamp FinTech, it was literally 10 years ago.
Mhm.
And this was when we had, I remember Tom Blomfeld from Monzo came to do a talk just when he started Monzo. He was still talking about his previous business. And 10 years later, he's gone. He's moved on to other things. There's a new team. And it's now for a generation that has started growing up with this new technology. It's the standard. You have a digital bank. You don't worry about NetWest, even though NetWest now have caught up with the app because they've copied what the others have done, right?
Correct. Yeah.
So this is my one assessment of where the industry is going. I don't think the incumbents actually will be able to innovate. I think they will be able to copy and they will be able to maintain what they have, but little by little, the other organizations will take over. And I want this to happen. So I'm manifesting. Um,
Nice. Nice.
on the other side, for me, trends come and go. Every time somebody came to me and said, "Oh, what you think of blockchain? What you think of whatever the current flavor of the day was," I would go, it doesn't really matter because some of these things will disappear and some of these things will reemerge. The question is, what do you do with it?
Yeah.
Like um, NFTs, ICOs, all these things came and went. And at some point they were super hyped and at some point they disappeared, but some things reemerge. It's interesting to see, for instance, how crypto has now found so many different facets that some of them are really relevant. Like
Mhm.
central banks cannot ignore it, right? So you see all these things happening. So ultimately, my position for trends is I don't care. I genuinely don't care because I know that whatever we're discussing today, and if I were to give you three hashtags to use, 3 years later, we may be talking about them, they might have gone. The one thing that is fascinating is that generative AI in all its flavors will change things, but we just don't know how.
Yeah.
So every big thinker, every large tech organization investing money into this sees the potential for change. But because of the lack of regulation, the lack of control at the moment, nobody knows which direction it'll go. But I'm going into this with an element of, I'm a kind of natural pessimist, optimist, Jesus, pessimist. So I think the good will outweigh the bad, but we need to find a way to control the bad that may come out of this.
Mm. It's interesting because, in insurance, and you're right, corporation, the big one, the global Fortune 500, are so much guardrails internally that it is not easy to go into that innovation journey. But I feel really lucky not to work with the 30 I used to work with, but to work with the 4 or 5 who actually want to make a major difference today in the world of tech, and for themselves to become maybe more technology driven businesses. What I've seen though, Nektarios, is that concept of ecosystem. How can you bring that concept of open innovation and ecosystem
Mm.
within? We've seen, great companies such as Wacom really building businesses based on the concept of ecosystem. So bringing digital businesses in and enabling them to find distribution for their products. Zurich has built its own Zurich Innovation Championship and added an accelerator component to it. I've been part of this for the past 3 years and very proud to have seen it evolve over time. So what's your view around building thriving ecosystem? Could that be much more of a strategic pattern we are seeing in the market? And what potentially could be the opportunity for businesses, large and small, to see, to grab as the market changes a lot right now, I feel.
When we started with Rainmaking Ventures way back,
Yeah.
the tagline was the best of big and the best of small.
Yeah. Okay.
Most organizations haven't figured out what the core strengths are still now, and say, you know what, let's just focus on what we're really good at and let other people work with us to do the things we don't know.
Yeah.
And for me, it all goes back to governance. So you can build ecosystem, you can build all the beautiful initiatives, but reality is that the corporate organizations are still so calcified in the structures that there's no pathway for an organization to know what we can do with a very early stage startup, which is all going to be like learning for us, and then maybe to a growth company that may be able to solve a problem that we have at a small scale. But how do we engage with a really big scale up that will ultimately help us ship product or change something fundamentally? It's still toe in the water stuff. But for me, the problem is the CEO might get it, the senior exec maybe not, because
Yeah.
it's vested interests. People are not incentivized enough to see things through, so people don't stay in the role long enough to
Yeah.
actually champion the success of an initiative they started. Innovation teams have come and they've gone, budgets have come and they've gone. Some of it has got to do with shareholder expectations. And as long as the shareholders only care about the bottom line and there's quarterly returns and the company's doing well, nobody will care much beyond about an interesting note in the annual report
Yeah.
or the shiny accelerator with the bean bags and post-its, which is when things haven't changed in the last 15 years. But on the other side, there are organizations who have been much more vocal about experimenting, about saying, look, we haven't figured this out, but let's do something where we bring a scale up and have them sit next to the business unit and they work together on the problem we're looking to solve. Let's outsource some of the stuff to a company that does it really well. And there are banks who have proven to do that. And I understand the financial industry world more than the insurance world, right? Ecosystem is important. A company like Zero is fascinating because that whole model is based on providing a core functionality, and then you just plug in the best of breeds.
Yeah.
And you know what? If one of the companies you're working with isn't as good as this new company, you just offer them access. So, but it goes back to more fundamental things. So for me, I strongly believe in startups collaborating to recreate this full service company that a bank might be, but doing this in a much more modular and agile way. But we're not there yet.
Yeah. So let's go into Radish. I want to
Okay.
know where you are with this project, right? We talked about it. I think over the past 2 years, we have talked about Radish, your latest ventures. It's Radish Credit, right? It would
Yeah.
be great to understand what it aims to do. And I think an angle is about empowering underserved communities through lending as a service. What inspired you to focus on that topic? What's your vision? What is the gap in the market you're aiming to address?
So what inspired me was a friend of mine talked me into joining him on a project, which was at that point a crazy idea. This is 2019. He wanted to build an LGBT bank because he felt as gay individuals, we have a different financial services need than the mainstream population, but the banks are not built to cater for that. We actually started workshopping this. We brought in a CEO. The whole thing actually launched under the brand of Daylight in the US, but it also shut doors last summer because the approach they took, which was to practically replicate a Monzo, but with an LGBT flavor, wasn't really the way to go. On the back of that, I thought about 3 years ago now, sat down with another friend, and we thought, the key thing in all of this is to find a way to build product for needs that aren't being met. So how do you build new financial services products for people who have a specific need and the mainstream financial system cannot cater for that? And this is what gave birth to Radish. So at the beginning, we weren't settled on credit. But then when we looked at people having specific life needs, we realized that the need is always risk weighted. It's either lending or insurance or maybe investment. And lending was something we understood better. So we thought, okay, let's build a company that allows people who have very important life needs that they cannot the need. And this is what Radish is about. So to give you examples to make it more concrete, you are a nurse from Syria, you've just come to the UK, you are fully qualified to work in the health system. You only need to reaccredit your qualification to get a job tomorrow. But as somebody who's just coming to the country as a migrant, as a refugee, you don't have a credit score and you don't have any savings. So if you go to a bank and say, if you give me a loan of £5,000, I will have a job tomorrow and I can pay the loan back within a year, the bank will say, go away. You don't have an income, you don't have a credit history. It's as simple as that. So the context of the loan is something that the financial system is not set up to recognize. The mainstream banks don't. Another example is if you're a prison leaver, and you know that every hour if you leave in prison will increase, where you don't have a job or an address will increase your risk of reoffending. You could technically train as a lorry driver within a week, and that comes with a guaranteed job. So you actually avoid that risk of reoffending because you can get to income really quickly. But again, if you go to a bank, the bank will not even talk to you because you don't have an address. And most people who are in prison are victims of identity fraud. So or you're an elderly couple who you own your own house, one of you has a mobility issue, you want to build a stair lift, and the stair lift costs £8,000. If you don't have the liquidity to pay for the £8,000, you cannot get a loan from a bank because you're 75 years old and you don't have an income. And the bank will say to you, well, we can talk about equity release, which is costly and it takes time. So it's all about understanding the specific need of the individual, applying a different logic to the repayment likelihood of that loan because this is such an important life need. And then saying we're doing underwriting differently. And our model is a B2B2C model. So we actually don't work with individuals, but we work with the organization in the middle who satisfies this need. So it could be the surrogacy agency for a gay couple, or it could be the stair lift manufacturer, or a migrant organization that deals with people coming in from other countries. And it's been hard. It's been hard because we started building a lending business and looking for investment about the same time when the markets went gaga 2 years ago. And we've pivoted a bunch of times, and we're finally at a point where we think that we can give out our first loans this summer.
That's amazing. And I think it's important to also highlight as you had a vision, right? And really focus on a very specific segment of the market, underserved communities. So LGBTQ might be women in general,
Yeah.
right?
Women escaping domestic abuse.
Right. And I'm thinking about one startup I've met recently in Switzerland who actually are building a media entertainment plus FinTech plus EdTech company, which is targeted to women and educating women around finance to actually enable them to be self-sufficient, create financial freedom for themselves, because 56% of women in Switzerland are dependent on their husbands, which I think, as you said, you really need to understand the need and actually create that resilience, particularly based on what we experience in the past 2 years. Where do you see the market you are aiming to address going? And you said you have now found the product market fit, and it took a few iterations. Where do you see your, Radish going? Is it going to be European? Is it going to be global? Where and how are you going to work with potentially your customer base?
Our model works in highly regulated markets. So for us, we have so much potential in the UK to start with. When we started looking beyond that, Europe is obviously a logical next step, but we're way too early for that. But the idea behind this is really these needs exist in all the countries. These needs exist in all its manifestations because the mainstream financial system is designed for the people who can afford it. So what happens to the people who can't?
Yeah.
Or what happens to the people where the system thinks they can't? So you can take any pocket of the population and we can find a market for it. But for us, the grand vision is let's grow this in the UK to the degree that we've satisfied most needs, and then we look at Europe.
Yes, cool. So as we are going towards the tail of our discussion, I would like to tap into your comment around the market and investing, because you're an investor, you have invested in many startups. The market went a little bit kaput over the past 2 years. When I look at the numbers, when we started 2024, we had 1.2 trillion invested in startups in 2022, that was down to $500 billion last year, 2023. So as an investor, an expert within the fintech space, among others, where do you see the investment landscape going? How we start addressing some of the common challenges?
First of all, I get super excited by early stage, right? So for me, investing is the most exciting when you do this at angel level, because that's where you get to meet the team. That's where you build intimacy. That's where you ultimately, I think can have the biggest impact. That's my personal take on this. If I look at our experience as a kind of early stage business looking for VC investment a couple of years ago, I was really surprised that all the people who said to me in my days of startup bootcamp, Nektarios, when you build your first fintech yourself, I want to write the first check, and nobody was even interested in having a conversation, which was a reflection on how the VC world is a little bit messed up. Let's just call it what it is. What happened in 22 was ultimately the result of a combination of things, but let's also acknowledge that 21 was just a crazy year where people were investing out of FOMO and because money was available.
Mm-hmm.
But there were a lot of bad investments, a lot of bad valuations, and the market needed the readjustment to some extent. I mean, it's not easy to hear. It's not easy for a founder who had to go through this, but reality is if you take a bit of a macro lens that the market was just too crazy. So something needed to happen. I think people are impatient for things to bounce back. I will very slowly see shoots of things coming back. So I think we will get back to a healthier investment environment. Everybody and the mother seems to be raising a fund at the moment. So I'm surprised that
I've
still people
noticed
are.
as well. Yeah.
So things will go up again. Maybe people are a little bit more cautious when it comes to the next wave or when things start consolidating again. It's difficult to predict. It's difficult not to predict. It's difficult to give a founder comfort when they're in the middle of it and they're struggling to raise or struggling to make payroll and need a bridge or whatever, or download, whatever the unpleasant things are that have happened in the past. It was also interesting to see when Silicon Valley Bank went down, how the community got together and supported each other and the solutions. And this is where VC stepped up and really did stuff. But I have views on the venture capital world as well, Sabine, so maybe not on this podcast, but part of it is also driven by the VCs not necessarily doing their job properly, because they were just riding a wave and they wanted to be seen to be doing stuff. And every VC who's investing is investing not because of the startup only, but also because they want to have something that they can use to raise the next fund.
Okay.
And that makes it an unhealthy cycle, which is not in the interest of the founder necessarily.
And we are seeing that now with generative AI. When we look at the AI numbers, AI in general went down in 2023, but generative AI went, massively up, probably, I would say 4 to 5 times, if it is not more. What would be your final word of wisdom, takeaways? What would you want to leave our listener with? The change makers, the early stage startup makers, entrepreneurs, leaders. What should they remember when they think about Nektarios and your path?
Wow. It has to come back to the mental health conversation we had at the beginning. There's 2 different ways of saying it. There's a reason why on a plane they tell you to put your own face mask, to put your own oxygen mask on before helping others. Or I can quote the rapper Ice Cube, who had a track where he said, "Check yourself before you wreck yourself." It doesn't matter if you're in the corporate world, if you're an entrepreneur, if you're a VC, the world is changing to a degree that we're really struggling to keep up.
Yeah.
And if you don't find ways to look after yourself, you will struggle keeping up. This is why the whole conversation around your own personal, emotional, physical, mental well-being, psychological well-being is important. So do something about it.
Do something about it. I think those are amazing words. Thank you, Nektarios, for joining me on Scouting for Growth.
Thank you, Sabine. It's been a pleasure.
I hope you enjoyed this episode of Scouting for Growth. Please subscribe, share with friends, and leave a 5-star rating. Your rating is so valuable. I review all of them, and my team help me adapt content to meet your needs. Also, connect with me on my preferred channels. I am a B2B growth expert, so you will find me on LinkedIn, Instagram, and Threads, and X as well as Blue Sky. All information available below. Until next, keep scouting for growth.